it's the market show of 2026. I'm Harsh Saita, with me is Sajit Mangat. And, it's a new year, Sajit. We've had double-digit returns in 2025 on the Nifty 50 index. When I'm looking at the total return index, which both of us shared on our WhatsApp chat yesterday. So it's been, while it's been a difficult year, it's been a double-digit return year. When you're looking at the mid-cap and small-cap indices, well, they've not done all that well this year. So it's been a forgettable year where the Nifty mid-cap and small-cap indices are concerned. Now, mind you, what you're seeing on your screen is the absolute returns on the Nifty. The total return index actually factors in dividend as well. So roughly 6% lower on the Nifty small cap based on total return index. The Nifty 50 index up 10% plus, in fact, when you're looking at the full year of returns, including dividends. So it's been a decentish kind of year in terms of returns. But let's switch back. First day of 2026, the global story and the global handover. In terms of the US markets, fourth straight day of decline. So some pressure seen there. I don't know whether it's the inactivity or the fact that there is some bit of cool off based on the returns that we've seen in the US as well. 20% plus on the Nasdaq, 16% plus on the S&P 500, and 12% a more tempered return on the Dow. But these are dollar returns. And when you're looking at the Nifty's dollar returns, the Nifty 50's dollar returns were just about 5 to 6%. So there's been a sharp underperformance there.
True. If you look at the Nifty thing, and if you look at the Nifty dollars returns for around 5%, is primarily because we had a rupee depreciation of 4.5%, which is there. Correct. So if you bring that in, we are talking about 10% all return, which is there. But from foreign investors' point of view, 5% return, this market gave them a 5% return, and compared to that, S&P giving them a 16% return is much higher, and that's what we saw last year, right? A lot of outflows coming in from the market, outflows from the Indian market, as a result of which, it seemed that nothing is happening in the market. There are stock corrections which are there. Many of the small and mid caps have corrected 20 to 30%. Some of the frontline stocks have also corrected, are off the 52-week high. But at the end, when you look at, if you are a index investor or an ETF investor, you will end up with a 10% return on your portfolio. And that's what. So individual portfolios may have got impacted because the shares have been hit, but index investor would have got a 10% return, which is there, which is very good return from a point of view of a year where we had setbacks with respect to a trade deal, we had geopolitics which is coming in, and then you have a lot of uncertainty with respect to earnings. We began the year with a lot of downgrades with respect to earnings, and that led to a time correction for the entire index as well. So it was a year where some of the investors would say that we want to forget it, but they took home money. That's what matters. And 2026, if you look at it, there are a couple of things which are stacking up for India from the point of view of global geopolitics. You have Russia, Ukraine, which may get cooled off, as a result of which the crude prices may cool off a bit. And the tariff impact on India will come down as a result of that. Then you have the India-US trade deal, the January Supreme Court ruling. If it goes in favor of Trump, then we go ahead and sign the deal by March, and that would mean that the 50% will come down to 25% odd. And if it goes against him, then the trade tariffs will have to be renegotiated back to where it is. So both ways it's good. From a macroeconomic point, we are looking at good consumption numbers, low inflation, expectation of RBI rate cuts further in 2026, and FOMC is also expected to cut rates if the labor market is going to be a big concern for them. And the biggest thing of that of all these factors would be the earnings upgrade. Towards the end of this 2025, we saw a lot of consumption led activity coming in, so there could be a earnings upgrade going forward into 2026, and that would help valuations of Nifty, which has been stuck in 2021 times going forward.
Absolutely. Let's talk sectors as well. The top